despite how this channel was founded, we don't spend a whole lot of time these days talking about and analyzing anything particular about COVID. The reason for this is we have viewed COVID as a very emotional issue as of late. And I say, pause, how the channel was founded because in our first ever videos, we made a very logical case for why there should be a coronavirus downturn. And we stuck with that until there was a very strong coronavirus downturn. And then on March 19th, we made a very logical case, and I encourage you to go back and review that video because it was a very interesting point in history and financial history. March 19th, we made a very logical case for calling the bottom. And since that period, we haven't talked, extensively about COVID. We haven't really had any COVID swaying opinions. We've had very few opinions that were reactive to COVID. The reason for this is the presence of vaccines and the presence of antibody remedies. The pharmaceutical companies have produced quite fantastic products, and even if cases rise, you should be able, at least in the United States, to get your hands on one of these remedies. So there's more and more every couple of weeks, it seems. We've got two, Merck and Pfizer, I believe, has another one. And then, of course, Regeneron's been around for a very long time. So there's very much a backstop developing in COVID. So today, I believe the market is acting very rational to this notion that we've thought about, despite the sell-off in the NASDAQ. COVID vaccine stocks, Moderna, Pfizer, etc., are up quite strong today. That makes a whole lot of sense. We've got some COVID cases rising in Europe, and the market is buying vaccine stocks. We like to see this because vaccine stocks are up and energy stocks are up. We have energy over here on this channel. The people who are listening and doing the strategies, it's okay if you're just listening, that's fine. But doing both, we have energy. Just to clarify, I have energy exposure. And we've seen in the past, because we had a scary period between July, middle, end of June, July and August, where COVID cases were rising. Very similar to how they are now. Very similar to how it felt in the market for us on Friday. COVID cases rising, impacting energy stocks. Today we're seeing the vaccine stocks rally. We're seeing Merkel float the idea of lockdowns. And we're seeing ExxonMobil up well over 2%, almost 3% at the highs. Yes, we had some selling into the close. Energy stocks still in the green. Oil still in the green. Okay? Not worried about that. NASDAQ, tech stocks, COVID beneficiaries, down 1%, over 1%. And I'll take a deep breath, okay? Let's take COVID deaths out of the equation. And let's just kind of take a calm, self-interested, I know that's a hard thing to say. It's a hard thing to, tell other people you are. Over here, we are monetarily interested. We are trying to generate the best returns. We don't shy away from stocks because they make oil, okay? We don't do that. We, of course, want a better future. And we actually believe over here the best investing strategy is to be optimistic about the future and not pessimistic about the past. And we believe there is a way to be optimistic about the future and also self-serve. We'll get into, we'll mention why Exxon is both of those at some point in this video. Let's just do it now because I don't even remember what I was just saying right before then. So a lot of value destruction that has occurred in companies like Exxon and other oil companies throughout the last 10 years, which presents a very good and possibly historic buying opportunity in them, is centered around the ESG movement and the desire to not include stocks in portfolios for social reasons, not related to making money, for social reasons. I'm sure there are people who believe fundamentally oil companies were not a good investment, and they were right. Unless, they're doing something with the dividend, I don't know. It's a very complicated question to answer. Obviously, they have not done as well as Apple or Amazon, though. However, I think that's going to change. There's been a structural underinvestment in energy companies, and that has led the price of oil higher. However, the pandemic forced them to cut costs, and the product they sell has gone up, so their margins have improved. In addition, there's one thing the social influence has done, which has forced them to engage with that influence and that mainstream message of becoming more green and lower carbon, and they have adapted solutions to the long-term problem of greenhouse gas emissions. I'm not going to deny there's plenty of nuance, okay, with what was formerly called global warming and now called climate change, okay? These people that want to say, 96% of scientists agree, like it's 100% correlated consensus on what they have, none of which is true. There's plenty of nuance within that 96% of the climate scientist community. Plenty of nuance. Anyways, carbon is in the atmosphere. It's altering the atmosphere. These companies are focusing on and have focused on for, I believe, at least a decade, probably several decades, because there was a point in which lead was used in oil. Okay, it's not like they've never cared about their environmental impact. I think we all, whether it be a sliver of ourselves or a big sliver of ourselves, have some level of care. Some level. Where do you fit on that spectrum? We appreciate diversity over here, and we want that diversity. We happen to be on the profit maximizing end of the spectrum. We're not on that spectrum. We're on that spectrum personally. When it comes to delivering results, there's no place for that, unfortunately. We have to be as objective as humanly possible. Just a little rant that I felt the need to bring up because we do talk about oil so much on this channel. Anyways, things are up. We've addressed the what we view as an unwarranted sell-off the past couple days. There's been chatter about sales from the Strategic Petroleum Reserve. This Strategic Petroleum Reserve the United States has a 6-day worldwide supply, about maybe 6.5 day. And it has a 1-month US supply, okay? If there is a crucial event that takes off a lot of supply, we need that reserve, okay? That reserve is not to satisfy Biden's political campaign to try and get a 20-cent reduction in the price at the pump. That reserve is if there is a massive hurricane that takes off production throughout the Gulf of Mexico and throughout Texas. That's what that reserve is for. Maybe sometimes it's okay to sell a little bit from it, but it has to be replenished. It has to be replenished. With prices going high, I don't know if we want to replenish. Why would we? Isn't there this whole green movement? Why are we going to replenish the reserves? Let's just keep them as reserves and let the market do its thing. And if the market does its thing, it should benefit oil and gas companies. Even here at 70, it's 75, it's 76, it's 77. It's looking good for them. We've talked about Exxon's net income last quarter, annualized relative to their valuation. If you have to watch that 10-second equation, we'll throw in a plus the dividend there. You're getting a pretty good deal on putting your money into a stock, into a asset. At a macro level, there's an interesting period we're about to enter that is going to be different than the high liquidity Fed pumping period we've entered. There's a good chance we get some rate hikes next year, some tightening, some inflation combat, and these should all benefit energy, I believe. Obviously, if we get too strong a dollar, it's going to freak people out. If we increase rates too much, it's going to freak people out. In energy markets, maybe. But inflation is occurring. That's beneficial for energy. It produces cash flow now. Inflation will cause a rise in interest rates, or should. It hasn't, but it should, and we believe it will over a long enough period of time. Rising interest rates increases the value for current cash flows. You can put your money in Exxon, have a dividend that adjusts, have that dividend come in every 3 months, have that cash flow increase, etc., and then take that money and put it into bonds if you wanted to. That will likely be rising in yield. It's a whole lot of good stuff for energy. We're holding these stocks. We like them, and I'm sure you know why. But if you want a full analysis in the heat of the selling, okay, because that's a good time to take a look at how we're feeling, where the true heart is when put under stress. That would be Friday. That would be Thursday. Look up dates you want to see. The videos are in the past. So that's today's video. And until next time, peace out.